Yes, ladies and gentlemen, this is the CFO Sato. Thank you very much for your time today. I would like to talk about the full year results first of all. So, as of April 1st, we have integrated the two companies, Yumeshin Holdings and BeNext Group. And so, with this, we now have a consolidated figure for the 3 months from April to June. The sales is 95.1 billion yen, which is 6.3% up versus last year. In terms of operating profit, due to the integration, we have the goodwill and the PPA depreciation and also expense regarding the integration. It is 3.3 billion yen, which is 28.4% minus versus last year. But this is basically all because of the change in accounting principles. For the ordinary income, we have recorded 4.9 billion yen, which is 3. And the EBITDA is 8 billion yen, which is 34.3% up versus last year. The net income, this is 2.6 billion yen, which is basically double versus last year. So on May 14th, we have reported to you the figures after the merge. And for all of the figures that we have announced at that time, we have basically achieved most of the figures. Now we'd like to talk about the quarterly trends. Due to the integration, the top line has grown. In Q4, it is 14.5 billion yen in 3 months. For EBITDA, we have more profit due to the integration in Q4. But at the same time, we are investing into full-fledged hiring now. But still, we have 2.6 billion yen EBITDA. Let me explain this to you in more details. Here we have the segment information. Due to the integration, we have reclassified our segments, the 4 that you see on the bottom of this chart. So, first of all, the trend by segments. You can see this by segment, and I will explain them one by one. First of all, this is regarding machinery, electronics, and IT and software. Next slide, please. So this is the quarterly results. You can see the trend here on the slide. So again, 3 months worth of figures here post-integration with an impact of approximately 6 billion yen. On the other hand, when it comes to the EBITDA, profits decreased because the days of operation was 1 day less compared to third quarter in fourth quarter. And also, the fourth quarter includes April, where we have the 360 new grads that have come in. It's seasonal. This is the time when the new engineers come in from the universities, and therefore, due to training, the utilization was low. So when it comes to machinery, electronics, and IT software segment, currently we are not benefiting so much from the profit added by the integration yet. Next, when we look at the headcount of the engineers, please refer to this slide. Due to the integration, the number of engineers is up by approximately 4,000. As a result, we have a total of 10,468, and the utilization rate is 94.6%. And when you look at this by BeNext Group, it's 97.5%, and former Yumeshin Holdings is 89.6%. Now, the former Yumeshin Group in this segment tends to hire inexperienced engineers, train them, and then get them to work. And that is why the utilization rate tends to be low. But even if you take out those who are being trained, Yumeshin Holdings utilization is still at 92, 93%. So this actually is a challenge that we must conquer going forward. Furthermore, in the future, we would like to continue with our post-merger integration, and the utilization ratio will be delivered to you with one figure going forward, starting from 96%. And when it comes to hiring, Up until third quarter, we were impacted by the COVID and we were holding down our hiring activities despite our will. But from the fourth quarter, as I mentioned earlier, we have 360 new grads coming in and also mid career employees, also around 400 that we have hired. So you can say that hiring has been resumed, and we will, going forward, start to expand the headcount here for new engineers. On the next slide, you can see the engineers by industry and sales, engineers by technologies and sales by industry. So you can see that IT software area is now above 50%. And the rest, please confirm on this graph. Next, we are looking at the monthly billing, etc. Now, we're showing you this monthly billing for the machinery electronics area here. So this is the first time we are showing you the monthly billing for this segment in this format. But when you look at this, you can see the post-integrated fourth quarter monthly billing figures is 567,000. So going forward, we will show you one integrated number starting from this 567,000. And next is the utilization days, the operating days, and overtime. Please confirm the slide at your leisurely time. Next, I would like to talk about the IT software monthly billing and other information. So, when it comes to IT software, it is down to 568,000 in fourth quarter. So you can see the former BNext Group figure here, 597,000, former Yumeshin Group, 400, former Yumeshin Holdings, 547,000 yen here. But so going forward, we will again pursue the post-merger integration, and we will show you one unified number going forward, starting from this figure, 568,000. Now, you can see the engineers by unit price. It's really about the fact that the number has doubled, really. That is the most important thing. As I've mentioned earlier, the former Yumeshin Group Yumeshin Holdings has always hired inexperienced engineers. So we have a lot from the 2,000 yen range and the 3,000 yen range. And it's really our challenge to figure out how to train these relatively low unit priced engineers going forward. Next, the construction segment.
We are showing the pre-integration figures as well, so that you can see the quarterly changes. For Q4, it may appear that it has improved. This is because of 370 million yen in income based on subsidies, employment adjustment subsidies. Market situation is on recovery trend since the beginning of this fiscal year, the April of this year. So we are expecting high profitability for this year. As for the headcount and the utilization rate, you can see here. And the demand related to the Olympics have come to an end. And because of the COVID-19 impact, we have moderated the recruitment activities, and therefore headcount decreased over the year. But we are enhancing the follow-up programs for the employees, and therefore we are seeing a major recovery in the job turnover. That is where we stand today. The monthly billing in the construction area, the basic contract amount is rather low, but because there are many overtime, over 600,000 yen, it's stable. Also, as was mentioned earlier, the portfolio is being corrected so as to control the turnover, and therefore the ratio by length of service is improving, as you can see. We'd like to promote this even further going forward. Number of operating days and overtime is as shown here. Next is the manufacturing segment. quarterly trends, the market demand is very strong and the recruitment activities are going very smoothly and the number of headcount is increasing. EBITDA is maintaining a very favorable level. Sales by industry and overtime is as shown here. We are seeing diversification in terms of industry as well as region, and there's really nothing particular to note here. It's just that we are promoting diversification. Next, number of employees, unit price, and operating days. You can see all those figures on this slide. Moving on to the overseas segment. We're talking about UK, which accounts for 99% of our overseas business. In UK, as has been mentioned several times, we are consolidating with a 9 month, or rather 3 month lag. Q3 is the peak season, and Q4 appears to go down slightly as a result of this lag. As for EBITDA, we do have stable profit being secured, but the Q4 profit decreased due to seasonal factors, including paid holidays and incentives. That was what happened in the last fiscal year. The pie chart on the left shows the percentage of sales in the UK business. Food related and logistics, the downturn was limited even under COVID 19. In other words, we have a portfolio that ensures stable sales. And as for portfolio, as will be explained by Mr. Nishida later, we would like to expand the profitable professional sector so as to improve on the profitability overall. Moving on to the balance sheet. Yumeshin Holdings, with the integration, the share price was extremely high around April 1st. And so, accounting wise, the goodwill amount recorded was larger than we had anticipated, about 70 billion yen. And the total asset is 129 billion. And so integration impact of 70 billion was rather significant. So this looks rather lopsided. For the fiscal year ending June 22, we are going to convert to IFRS from JGAAP, and accordingly, the 70 billion yen goodwill will be reevaluated. And about 10 billion yen, we believe, would be the target revaluation. That's my view as a CFO. Next, the earnings forecast and the dividend forecast. First, the business earnings forecast. For this fiscal year, we will continue to use JGAAP, but on the slides, we're showing the IFRS based. Since as I said earlier, we'll be converting to the IFRS at the end of this fiscal year, and therefore we are showing both based on JGAAP and IFRS, but our explanation would mainly be based on IFRS. Net sales 148 billion yen based on IFRS, which is up 55.6% year on year. Operating income 9 billion yen. This is not apple to apple comparison, but 9 billion yen. EBITDA 10 billion yen is our forecast. Last fiscal year, the employment adjustment subsidy income amounted to 1.5 billion yen. There will be none for this fiscal year. So there's already a difference of 1.5 billion yen. But even with that, we are anticipating EBITDA of 10 billion yen and operating income of 9 billion yen. Now, another thing. The UK business, which is consolidated with a 3 month lag, is included so as to prepare for IFRS. So the UK business portion is 15 months, not 12 months. So please keep that in mind when you look at the figures. This is the forecast for overseas. With the revision of the social insurance system, the cost will temporarily go up which would hurt our overseas business. But this is a one-time effect, and therefore we are now reclassifying the portfolio accordingly. Dividend forecasts. In FY21, 17 yen interim dividend, 25 yen year-end dividend, and 2 yen commemorative dividend for a 44 yen annual dividend as planned. For FY22, there is no commemorative dividend, but we are thinking of increasing the year-end dividend by 3 yen for 17 yen interim dividend, 28 yen year-end dividend for a total of 45 yen. In other words, a dividend increase is being planned. Last item that I would like to cover is about the share buyback. The capital policy will be explained by our CEO Nishida later, but in order to improve the capital efficiency and to enhance shareholder returns, we plan to implement the share buyback up to 4 billion yen, and the number of shares to be acquired would be maximum 4 million shares. The acquisition period, the slide says August 9th, but actually it's August 10th because August 9th is a national holiday. So the period would be between August 10th, 2021.
Hear from CEO Mr. Nishida, please. I am the Representative Director, Chairman, and CEO Nishida. I would like to present to you the midterm management plan. Thank you very much for your time today. So, on April 1st, Yumeshin Holdings and BeNext Group has integrated to become the new BeNext-Yumeshin Group. We have this BY25, a name for the midterm plan. B stands for BeNext and Y stands for Yumeshin, BY25. So this is the 4-year midterm plan up to the fiscal year 2025. So let me explain. These are the highlights regarding the midterm management plan. First of all, the external environment that surrounds us, the market, situations. First of all, we have the COVID pandemic that is progressing even now, and it has brought significant changes in the society and the working environment. We will see recovery going forward, but workers will continue to think about how to work or what they are working for. And it is really a timing where it's significant for us to think about these things. Against this backdrop, we, BeNext-Yumeshin Group, has integrated in April. And with this, we have been able to become the staffing company with the largest number of engineers in Japan through this integration. We cover various industries, including machinery, electronics, and various other industries, and that means our social responsibility has expanded as well. And it means that we need to be able to share various values going forward. This is very important. Therefore, as we put our midterm management plan together this time, we had a thorough discussion about what kind of company we'd like to be and our visions. There has been a discussion that we've been having before the integration. So, before I talk about the details of the midterm management plan, please allow us to talk about the purpose of this new BeNext-Yumeshin Group. We have this purpose: open up individual potential through rewarding work. This is what we have decided. And I would like to explain what this means. I have mentioned a lot of words, but now here is an illustration. You can see a lot of doors in this illustration, and these are the doors that are representing opportunities and the chances that open up before you as we work. Now, let me explain this in more words here. Our purpose here, which is to open up individual potential through rewarding work, can be explained as the following. Just as each individual has a different way of thinking about happiness, we believe that rewarding work for workers is also diverse. And our role is to create many doors to open up possibilities and a milestone toward a rewarding work for each employee. So we will support the workers to open the doors. The doors for some people could be the challenge to a new job. The door for some other people might be to improve their skills in training. Or a door for some people might be the time to consult future careers. So we believe that people will always grow and drive the society forward when they open the next door. We will increase the number of people who open the door to the next phase to make society more diverse and prosperous. So, this is the way we, the BeNext-Yumeshin Group, exists to create such a future. So, this is what we believe is the significance of our existence. This is our purpose as we pursue our business. In the first year of this midterm management plan, BY25, we would like to pursue the 4 years business. And here's the plan for that. First of all, our core business is engineer staffing. So, first of all, I'd like to speak about the outlook for the engineer staffing market. So, even in the pandemic, and even during the phase where we see recovery from the pandemic, we believe that the supply demand matching opportunities in this core business area will continue to expand. Actually, we have a very stark tightening of the supply demand balance right now. And we know very much that there is a lack of workforce, especially the lack of workforce in the IT software industry can hamper the development of the whole nation, it is said. So that is why it is even more important for us to continue to staff the resources to drive these businesses. We believe that that is why in this engineer staffing market, all of these things that I have mentioned can become a very strong tailwind for us. And therefore, we will achieve significant growth by focusing on this high volume market. And we will continue to invest to expand our strengths. So, now let me explain where we are positioned in the industry. On this diagram here, you can see some competitors. Not few, there are many actually, but you can see that we can plot these in the market. In this case, we have a pyramid here from low end all the way to the high end, and we exist in the mid to low end area where it is the very big volume zone. And based on this business model that we have, we would like to make sure that we improve the skills of our engineers so that we can further pursue the high end market as well. I would like to repeat the vision that we have. What are the goals that we want to achieve through this business integration? We want to become the number one player in the engineer temporary staffing industry. I'm saying this many times because this really is what we want to achieve, and it is connected to the purpose that I have just explained. We already have the business scale that is comparable to the industry leader. And in the machinery, electronics area, we already have very strong competitiveness. And we will gain our income from this core business area and take that a resource into further investment for our growth. Due to this business integration that we have achieved, we would like to make sure that we further accelerate our growth speed, conquer these new challenges, and achieve these high management goals that we have set for ourselves. BY25, again, aims for net sales of 250 billion yen or above, EBITDA 25 billion yen, and a headcount of employees of 30,000. This is an ambitious goal that will drive us in the next 4 years. In our business plan, as the CFO, Mr. Sato, has explained, we have confirmed this fiscal year's figures. And based on this fiscal year's figures, we have set the goals of fiscal year ending June 2025. This is where we have a goal of the sales of 200 billion yen net sales and EBITDA 16 billion yen. Also, by pursuing other methodologies, for example, M&A and other efforts, we would like to make sure that we achieve the BY25 target of net sales 250 billion yen and EBITDA 25 billion yen. We would like to continue to work on brushing up this plan every day. Now, in each of these domains, you can see the numbers that we have laid out here, but especially in the IT software area, it is the key focus area where we expect high growth and high growth in profit as well.
And here, before getting into each segment, let me talk about some of the highlights. Machinery, electronics, and IT software. In this particular category, in the IT software domain, the development of inexperienced people, this model will be promoted so as to create the middle level IT engineers. In the machinery electronics area, we are going to promote what we call the engineer value model so as to improve on the skills and the unit price. In the construction area, already we have the position of number one in Japan. We want to enhance this further towards reducing the turnover rate, which has always been the issue. We will be maximizing the LTV of engineers, the lifetime value of engineers, as well as to deepen the long term relationship with customers. In the manufacturing area, we have the business model with one of the highest profitability in the industry. We will promote this further for stable growth. In each area of business, we will explore key clients. And by enhancing our own proprietary recruitment model, we would be stabilizing the recruitment overseas. In the UK business, which has been our core area, we are going to enhance the profitable professional sector. And also in Asia, in each market, we would establish the management operational system that best fits the need of the market. Let me elaborate on each of the segments. In the machinery, electronics, and IT software, particularly for IT software area, the environment is changing dramatically. And conventionally, there has always been the issue of the shortage of IT engineers in the market. And with the advancement of new technologies, different types of skill sets are being required. And the technology level that is required is becoming much more relaxed, meaning that the environment is well fit for our business model, which is to develop and foster the inexperienced engineers. And now the operating companies are having their own IT organizations rather than relying on outsourcing of the IT capabilities. And so this is a good movement for our business as well. In other words, our business model of employing the inexperienced engineers and to develop their skills, that is really proving to be very competitive in this environment. So we hire inexperienced people, provide the initial training, do the OJT after assigning them to our clients, and then have the mid-level training. And we will be promoting this in cooperation with our customers, as well as to improve on the OJT within the group. So this hybrid training program will be promoted for the further training purposes. In machinery, electronics, and IT software segment, especially the machinery and electronics domain, this is the model that we have been promoting. The engineering value model that has been promoted within the group. This is the model to enhance the value of each engineer so as to upgrade the skill sets as well as the career development of each engineer. And this would result in the improved unit price as well. In the construction segment, as was mentioned in my summary earlier, we have a very strong position in Japan. We are the largest player, and we need to further enhance this. And for that, we need to promote the long term employment, the stable utilization of engineers, as well as to establish long term trusting relationship with our customers. So we have changed the business model to address that, and we have changed the sales and marketing structure as well, so as to cater to the needs of our customers. We believe that this would be conducive to the further promotion of our business. In the manufacturing segment, conventionally, we have been pursuing the efficiency and effectiveness rather than size. We will maintain the structure, and in each area, we are going to enhance their recruitment so as to ensure even greater growth going forward. Overseas segment, which is mainly focused on the UK market, healthcare, driver, and construction, which are more profitable business areas. We are going to shift our business portfolio to those areas so as to improve on the profitability. In Asia, many of the markets are still not mature, but the subsidiaries and the joint ventures that we have already established are already profitable. And we will continue to pursue the strategies that best fit the local needs. With the integration, the size has increased, and we want to leverage and maximize the benefit from that. For that, we need to implement the company-wide measures. We are going to utilize the data through DX, which would speed up the recruitment as well as to address the needs of the customers. So we are going to make the group-wide efforts for further DX promotion. And in the payment and other backyard operation, through the integration, we can reduce the cost through the economy of scale. And also, to achieve BY25, one of the most important measures would be mergers and acquisitions in machinery, electronics, area where we enjoy strength. For the sake of securing the size and scope, we will aggressively pursue M&A opportunities. And in the IT area, we are going to look for the target companies that have high level skill sets so as to contribute to the skill upgrade of the younger engineers. But we'll also be looking at the companies that have the capabilities that we currently don't have within the portfolio. And we will be setting the key performance indicators to measure the progress in the purpose management, not the numerical targets. At each of the companies, the emphasis might be different. Could be that in one company, the number of new employees would be an important KPI, whereas others, retention rate for a certain period of time might be a key personal indicator or the performance indicator. Yet for others, it might be the training hours per employee that is important. But we are going to set those most appropriate indices for each company to measure the well being level of each of the employees. For the corporate activities, ESG and SDGs are becoming more important. So let me talk about our initiatives in those areas as well. We are addressing the essential aspects of ESG so as to provide the solution to social challenges as well as to improve on the corporate value enhancement over the medium to long term. And we are going to incorporate the measures to that end. And while setting those non-numerical KPIs that I mentioned earlier, non-financial KPIs that I mentioned earlier, we are going to enhance our understanding of the ratings by the rating companies. And later this year, we are going to issue the integrated report that will include our ESG and SDG initiatives. And we will continue to update our information on the SDG aspects. The basic items, especially SASB and GRI standards items, would be incorporated and will be disclosed in our integrated report. And our own items would include the indicators that will measure the well-being level of our employees, and those would be disclosed at the company website of each company. In terms of environmental initiatives through our group companies, we will aggressively incorporate the recycling of paper and others. As for capital and financial strategies and shareholder return policy, you can see the slide here. During the BY25 period, our capital and financial strategies are as follows, as was explained by CFO Sato. With the integration, the ROE went down. And during the BY25 period, we would like to restore the ROE level of 10% or higher. And the specific measures would include the measures that are for the shareholder returns, the share buyback, that is. And during this period, we are thinking of executing the share buyback of between 15 and 20 billion yen. And for M&A investments, we have the hurdle rate set at WACC 8% so that we can implement the disciplined financial and capital policies. As for shareholder returns, the stable dividend payments and share buyback I mentioned earlier would be pursued. We have been increasing dividends each year, and we will continue to do so. So over a medium term, our target dividend payout ratio would be around 40%. As for the share buyback, we gave you our policy already. So if I could go over the targets again. We are to go beyond the targets for the medium term and pursue even aspirational targets. We are committed to achieving BY25 targets, which would be net sales 250 billion yen, EBITDA 25 billion, and the headcount in Japan of 30,000. So those are the targets that we have set for ourselves for the next 4-year period. I ask for your continued support and understanding. Thank you. That concludes my presentation.
Thank you very much. So now we would like to start the Q&A session. So please, if you would like to submit your questions, type them in the question box on the left-hand side of your screen, and we would like to read your questions. So please allow us to take your questions. Now we'd like to take a question. We understand that when you look at last year's results, there is a small difference in the operating profit between actual and plan. But there seems to be a big gap for ordinary profit and EBITDA. Is this because of the employment adjustment subsidy? That is one. The subsidy income is one. And I think you're talking about the result in the last fiscal year. So we have the integration related expenses, several hundred millions of yen that we thought that we will spend for the integration, but we ended up not using as much as we thought. So that is also another reason as to why for operating profit, the difference is only about 150 million yen. But for the ordinary profit and EBITDA, it is different by 500, 600 million yen. Thank you very much.
The next question regarding FY22. There is a difference in EBITDA and operating profit based on IFRS. Is the factor related to the integration cost? 10 billion yen. CEO Nishida uh, uh, pointed that out as a very important EBITDA target for medium term. The difference between operating profit and EBITDA, the difference of 10 billion yen. And you wondered whether this is related to integration cost. The answer is no. Integration cost is not the factor for that gap. As for J gap, there is the amortization of goodwill and others. But in the case of IFRS, there will be the provision for the paid holidays and others. And that 10 billion is just one target. Actually, it's plus or minus 10 billion. That has been the target.
Thank you very much. So I would like to take the next question. Currently, the lack of semiconductor, is this creating any impact to your business? If you can let us know the trend by segment or by industry, that would be very much appreciated. Please. Yes, currently we are seeing an impact in transportation, electronics, electric, in manufacturing, basically, but it is not a great impact. It is not that significant. When it comes to machinery and electronics, there is a part where we work on semiconductor manufacturing device, which we are very active in, and the utilization rate is high, and we are getting many orders too. In this area, we are actually getting a strong tailwind because of the lack of semiconductors. Thank you.
Next question. In the Japan gap, J gap basis, what is the amortization period of goodwill? And on IFRS basis, is the operating profit for fiscal 25 be around 15 billion yen? Now, in J gap, the goodwill amortization period is 20 years. That is in relation to the Yumeshin Group. There are other goodwills, but as far as Yumeshin Group goodwill amortization is concerned, it's 20 years. Now, EBITDA 15 billion yen, I think, is what you are referring to in your second question. I am thinking more like 16 billion yen. There are various costs accounting wise, but it's almost comparable.
Thank you. We would like to take the next question. We can see in your midterm plan where you have set your plan and goal separately. What is the reason behind this? Yes, as I have mentioned in my presentation, we have this experienced this integration, and with this integration, now we're at a right place to aim to become the number one player in this industry. So when we just simply build up our figures bottom up, and the end result is the integration effect, then the integration is meaningless. The plan is just a bottom up addition of all of the figures that we have calculated. But that is not enough. That is why we have a goal apart from the plan, which is much more ambitious than the plan. It's not just the addition of the numbers that we see. That is why we have the new target under the BY25 slogan. We actually believe this is a very aspirational target, and it's really about how we pursue this. That really is the challenge that is given to us, that management and all members of the company actually need to work on in the next 4 years. So, in that sense, we hope that the goal ultimately becomes the plan for us. That is the challenge for us, and that's why we have written both of them here. The CFO will also add here. So we have this figure here, 200 billion and 16 billion yen. But this is not counted in this plan at all. As Mr. Nishida just mentioned, if we just improve and expand, then this number here will be achieved for sure. These figures here are like a commitment in that sense, but that is not enough. As Mr. Nishida mentioned, we're going for net sales of 250 billion yen and EBITDA 25 billion yen. So that's why we would like to continue to roll the plan to update it every year.
Next question is the progress of PMI, the post-merger integration. The PMI is going very smoothly. When we made the announcements of the previous quarter results back in May, it was right after the integration. And so we assumed various costs. Just because the actual cost was not that large, it doesn't mean that PMI is not going smoothly. In fact, the directors, executives that are in charge of PMI are meeting every week. What do you think, Nishida-san? Yes, absolutely. And on each business area, of course, there is the confidentiality, the NDA agreement. But we are sharing the market information, the customer information to the extent possible. So with the integration, we want to enhance the strength of our businesses, not just on the management level, but on each business front level. Thank you.
So here's the next question. The EBITDA looks a little bit low when you think that it's just a simple addition of the former BeNext and the former Yumeshin. Have you included some cost up here? No, there isn't at all. So the CFO, me, is a very conservative person, I tell you. These numbers that I show you are very solid numbers that we will do for sure. It's a commitment. Please take it that way.
Thank you. The next question. The utilization rate in the IT machinery and electronics, how specifically are you going to improve that, including the number of employees who are in training? What do you think would be the appropriate utilization rate? Can you also talk about the expense for recruitment? For example, what will be the ratio compared to the annual sales? In former Yumeshin Group Holdings and BeNext Group. In each group, there were some differences in running the business. And regarding the utilization rate, we are trying to align the two. In IT software, we have the development level so as to promote the skill set of the inexperienced people. The training takes place. Training will continue for about a month to 3 months. So we know that because of this policy, the utilization would be slightly lower. Uh, Even with that, we feel that the current utilization rate is not ideal. So we want to speed up the recruitment. So 93% is the effective utilization rate, but our target is to be above 95%. And regarding the recruitment cost, I think you asked a question about that as well. And in two former groups, there was a big difference in terms of the recruitment cost. And we're trying to improve the efficiency of recruitment as well as to optimize. We want to control the cost. DX investment and the collaboration of recruitment will be promoted for that effect. If I could add, says Mr. Sato, regarding the recruitment cost for a dispatch a company like ourselves, this is the most important part, so we don't give the details. But in terms of EBIT rate, we expect the improvement of 2% or so. And this reflects the improvement in recruitment costs that we envision for FY25. Thank you.
We would like to take the next question. So, you said that if you need to make new M&A from UK, you will execute it within the financing that you can do that you have gained from the UK business, you said. But how much is that? If you can give us a rough image, as much as you can disclose, please. Yes, currently, what we're thinking of is not a big figure, really. It's just a few hundreds of millions of yen. As I have explained on this slide, we are trying to make our business more efficient. And so there is the current business that we can utilize, and there's some peripheral businesses that we can utilize to its best so that we can convert the business without making significant investments. I would like to add, too, from Sato, we disclosed this information earlier about one company in the UK companies. We actually sold it back to the original owner. So that is how we will make transactions within the amount that can be controlled within UK, and that is how we are managing our business to expand and move forward. So there really is no burden from new investments to expand our UK business. Thank you very much.
Next question. You have introduced a new management system based on CEO and COO. Can you explain the reason why? Well, we made a timely disclosure on that, and that explains the reason there. The company group is getting larger, and the electrics, machinery, we have that area, and IT solutions, and in construction. So we have these companies that have the size of 10 billion yen or higher each. And to expedite the decision making process and also to have the optimal allocation of the personnel. We decided to have CEO that will focus on the domestic operations and to have the COO whose responsibility would be to look at the overall operation so that we can have a more speedy decision making and management. So for disclosures like today, I am representing the company. Thank you.
Thank you very much. And now we would like to take one last question due to time restrictions. Please allow us to confirm the question. Yes, so the question is, can you please give further insight on capital policy and shareholder returns? Total dividend payout ratio is 50%. But how about your target for the total shareholder return ratio? So again, I would like to read the question now in Japanese. Can you please give further insight on capital policy and shareholder returns? Total dividend payout ratio is 50%, but how about your target for the total shareholder return ratio? Yes, for the year ending June 22, dividend is 45 yen. And the dividend is 45 yen by cash and buyback is 4 billion yen. So the total shareholder yield is easily over 100%. So, as Mr. Nishida mentioned, every year during this 4-year midterm plan, we will do buybacks every year. So, the payout ratio, the so called dividend payout ratio, will go down gradually, and the total shareholder return will go down from over 100 down to 70-80%. But still, we would like to provide high shareholder returns, and we will make sure that we provide a dividend hike every year as well. So, in terms of the capital policy, I have explained this in my presentation. Thank you very much. So now it is time to close, and we would like to end the Q&A session. And with this, we would like to close today's earnings briefings. Thank you very much for your attention. Thank you.